The S&P 500, the NASDAQ 100, that's what we're discussing here on the day. And when we look at where we're at, how we're moving overall, the market, again, you look really good. Now, I will say some of the intraday action hasn't been the best. It's been kind of slow, kind of choppy. But the overall action is very key when you look at where we're at and how we're moving. And ultimately, it looks like you want to get more continuation. So I want to highlight our previous all-time highs are right here on the NASDAQ. I'll move into SPY and Qs in a second. You can see that level right here at 24,070. If you zoom in basically from the overnight session really quick, you can see right here, you basically broke. This was, going from Friday into Sunday last night in the after hours. You came down this morning, 3 a.m., you touched that level, and then you shot straight up. This is the premise of everything that we talk about here: break, retest, continuation, and that is exactly what you got. Now, I will say when markets opened up, go to the 5-minute just so you can clearly see this level. Let me bring this right here. See the opening range. So basically, this is the opening range, the first 15 minutes of the market. You open up basically at 24.20, and then you really just you don't do much for the remainder of the day. Like you do get 60 points of upside, but it takes you 8 hours to do that, right? So on average, you're moving up like 7 points an hour for the remainder of the day. Like that's just not ideal. So again, you didn't get a lot of great trading opportunities on the day. That being said, you're still going straight up. Now, this week, obviously, we have very big news going into interest rates, what I think is going to happen there with the FOMC meeting. And then I think there's a lot happening behind the scenes as well with the mortgage rates. We'll talk about that here in a second. Now, before I go too far, I do want to say right now, if you want to see how we trade, what we trade every day, the Discord link is in the bio. It's right below in the description as well. Again, you get access to every morning our watch list, what we're looking for, what we're looking to do, kind of our game plan for the day. Then the watch list on equities that we're looking for as well. Jordan goes over this. You get access to our swing intraday trades, and then obviously our scalps here posted in technicals. I want to say this over and over. I haven't been trading like crazy. I haven't been buying a bunch of stuff. It's been, a lot more selective. Today, the only trades I was looking at were two: Nvidia for the downside potentially, and then also Tesla. Even though you're so bullish, it was more just about key levels. I posted this at 9:30, under 414, looking to go short. You just never kind of broke down. Later on, what happens on Tesla after you get that kind of move, you eventually break down, boom, and you really drop almost $15 rather instantly, right? So again, that gap down there could be interesting for more downside. But again, what we trade, how we trade, what we look for, it's all there for you. The Discord link, like I said, down below as well. Okay, now going into the market, what do we see happening? What are we looking for right now? I just want to make sure futures are really clear, at least right now. Okay, getting rid of some of this stuff for you as well. At the bare minimum, I just wanted us to stay above previous all-time highs. ES is already outperforming. It's doing its own thing. NASDAQ is just now breaking out. But ES, as long as you're above 6,600, I don't know how you could be bearish. I'll just tell you that right now. I mean, even looking at this, you didn't even get a retest. You kind of just came back into your little previous overnight. Yeah, this was Friday's high. So you actually broke Friday's highs and just got that retest. So you look really good there. Dow, maybe a little bit lackluster overall, but still looks pretty good. As you can see, just mounted over previous levels. I mean, this is the very definition of a bullish behavior. Make new highs, retest over previous highs, continue up. That is what's happening. That's what's going on. There's nothing crazy about this, but that's where we're at. Again, the action just a little bit slower. So I'm still being very selective at all-time highs, but you look really good. Okay, now going into SPY, again, you can take a screenshot of these levels if you want to see. There's not too much you really need to go over here, though. Again, you're just pushing straight up as of right now. Okay, again, what I will say is there's some illiquid levels. So if you do start dipping, you get below 659.5. you're going to drop quickly into 658. But it's only $1 of downside. So it's like you being selective with what you're looking for, why you're looking for it. Same thing here. More of the downside trade would be here if you want to go short, getting back below 657. I would start looking for that move of 652. That's a better trade. A lot. Really, there's no liquidity there either. But again, what I'd be looking for on SPY, if I was looking for downside, for upside, again, new highs, test previous highs, continuation, right? QQQ, literally going straight up. So again, if you were to lose 590, I could see us slipping down to 587. But again, nothing really going on there. Again, people asking me for a target, key levels. When you're in all-time highs, there really is no targets. There are no key levels, right? You're just getting continuation and price discovery. There's nothing to react based on, right? There's no target set in stone there. You can do fib extensions, but that's where you're at. That's how you're moving. This is why I was saying on repeat, there's no reason to get bearish because you're doing the same thing over and over and over. You're just getting more and more and more continuation, right? Very important to understand that with how we're moving and how the market really is playing out here. So important to see that as well. The other area of the market that really needs to get going, that this is an interesting point here, okay? SMH semiconductors are at all-time highs. I want to highlight they are at all-time highs, okay? But the top dog here is NVIDIA. I want this to be like abundantly clear. This is the top dog of semis, okay? There's no other way to put this. You don't need to put it any other way. This is the stock, right? And the fact that NASDAQ is running with NVIDIA just moving so trash is kind of crazy, hindsight. But again, NVIDIA will heat back up. Not too concerned at all. Again, if you get back above 179.5, I'm just looking for us to be back in the range, back into 182, 183. But again, I think I would be really watching NVIDIA to get the push back to the upside. Below 176, I'm pretty bearish for the gap fill. But again, where we're at, how we're moving. You know, other names in the semi space still look pretty solid, right? You know, AVGO, for instance, right? This is a good example. You know, just sitting at all-time highs, once again, doing the same stuff on repeat. And again, you're just mounting previous highs, holding up. I posted this in Discord. It was kind of crazy, like touch of 356, immediate bounce, right? You know, even AMD is getting a little bit of love. You know, you got TSM. Obviously, has been going crazy. We talked a lot about this one last week. But again, still looks amazing. Like, it's the same thing. AMAT's getting love back to the upside. Honestly, AMAT's probably one of the best setups in the market right now. This is probably my stock of the week as of right now. Above 171, you are pretty much illiquid back into 175. Option contracts move good if you've traded it before. Would be watching that. ASML, another name that's just going crazy. So again, you're getting semis that are moving good, right? I don't want to say that, you know, just because NVIDIA is moving bad, that the rest of semis aren't. They are moving good, but NVIDIA will play catch up, and we've seen what happens when that when that starts to occur. ARM, another name here, retesting 150, bouncing right off it, like we talked about. Again, you look really solid. Semis look strong. They're getting a little bit of momentum back there as well. Now, the other side of this, like what's going on with the rest of XLK and tech, right? You know, Microsoft breaking back out. We talked about this, right? Back above 499, 500. It's an easy long. You start breaking a little bit of a downtrend, you're breaking back up. Again, very, very bullish. Back above like 504, 505, really back above 510. A lot of confirmation. You're looking back into 517. You get above 517, 518. I think we're looking back for highs, okay? Amazon, another really good looking name. You know, Amazon's trying to get back up here. Now, you get that push into 233. It's a big level there. If you can get back above 233 and hold on Amazon, it's a long, and I think this could go back into all-time highs. Reminds me a lot of what Google did post-earnings. Definitely be watching that. Speaking of Google, again, you're going straight up. Remember, Google, this is when we started talking about going long, 197. You know, right here, you mount that, then back above 203. It's a slam back into highs, right? That's where you're at. You're going berserk now. So, again, it's important to realize, like, these names that, you know, Amazon and Apple, in my opinion, are two of the names that probably have some of the most upside in the entire market, just because they haven't had that run yet. Like when we go back, you know, a few months ago, and I talked about Google being one of the names that had the most upside, right? Amazon and Apple are probably the only two names left in that like conversation, because they really haven't, you know, broken any crazy highs yet, right? So again, be looking for Amazon to get going. Apple, also very interesting here on the day. You know, you had that dip, right, going, you know, Tuesday of last week into Wednesday, Thursday, and now you're bouncing back up. You're back at the 237 level. Again, you know, it's the same levels, guys, on repeat. This, you know, I don't just start like free balling here, right? Back above 237.5, 238 to be conservative. I'm looking for Apple to break out into the 240s, possibly even towards 250. Again, one of the biggest, best names out there. I'd be watching it like a hawk. Above 237 looks phenomenal. And like, I think today was a testament to just how good of a stock it still is and how undervalued it really still is as well, okay? Another name out there is Netflix. Again, Netflix trying to battle back above 1,200. We said below 1,200 easy into 1,180, 1,185. We talked about this in Discord, you know, last week. Again, like I said, I haven't been taking a crazy amount of trades, you know, but I've posted everything that we've wanted to be watching, right? So Netflix here, below that, looking for 1,180, 1,184. This was last week on the 12th, right? So again, you hit that level, getting back above 1,200. Now, again, I'd be very conservative until you get back above the 50 SMA, 1218. Above that level, I'm looking back into 1211 or 1231, 1230. Okay, so again, above 1216, 1217, looking for 1230, 1231. What we're looking for, why we like it. Okay, now another area of the market, mid caps, what's going on there as well. One of the names I still like a lot is Palantir. I got pretty concerned about it today. You kind of were like rejecting at 169. I like Palantir a lot. I think this is working back into 176. And ultimately, you really don't, you went down pretty fast. I'm going to tell you that right now on Palantir. You don't have a lot of liquidity. You're going to have a little bit of 176. But really after that, you got nothing like 182. Like you can move quick here. And Palantir is finding buyers. And again, I don't like to get crazy when it goes to mid caps. I don't like to find 30, 40 different names. I like to focus on a lot of the same names. So when you see me get back excited about mid caps, it's usually me rebuying the same names again, set a cheaper value or getting another type of play going on there, right? So Upstart's another one of those, right? Bouncing off your 200 daily moving average. I can't say this enough, guys. When you're getting retest of the 200 SMA, the odds are just in your favor, right? One of the best ways to look at this, and again, I hate equating like stocks to gambling, but it is, right? But it's when you're playing blackjack. If the dealer has a 6 and you got, an 11, you got a 10, you got to double down. It just makes sense. It just is, the math is in your favor. And so when you're coming back down into these massive 200 SMA levels and you've bounced previously so many times, the odds are just in your favor. They just are. Unless there's just something totally changing in the market or there's a total sentiment change or, something crazy is going on, obviously then things change. But there's no reason to get crazy, right? Very important to realize that. Now, I do want to go a little bit into the fundamental side of rate cuts and what's happening there as well, okay? Which I think I need to just for the sake of this week, and I know people are going to have questions, okay? The first thing I want to do is go over where we're at based off of yields right now, the 10-year and the 30-year, okay? I don't really want to go too much into like my opinion, what I think should happen, this, that, and the other, okay? I'm going to talk about what I just think is going to happen out there and how I plan on trading FOMC. Now, first of all, the day of FOMC, I'm probably not going to do much until after the meeting or until I at least read the FOMC statement and get the number that comes out. If we get a 50 basis point cut, you might just want to slam the market. I know people are like, oh, it's bearish. I would probably slam calls if we get a 50 BPS. I don't think it's going to happen, but if it does, it'd be awesome, okay? Now, let's look at where we're at as a market. Now, I want to highlight something very, very important, okay? This was the last time we got a cut, right about here, okay? I want to make this very, very clear. This was the last time we had a rate cut. Now, what happened is you were dropping all into the rate cut. Everyone, because we knew they were basically saying we're going to cut rates in September and see what happens, right? And the yields just went straight down, right? They went down in anticipation of the cut. Then once they cut, Powell said, look, we're probably not going to cut anymore. We need to sit here and see what happens. So when they said we were going to sit here and we'd see what happens, well, what happened? The market started pricing in future, no cuts, and rates, the yields went back up. Mortgage rates went back up as well. Giving you a visual of mortgage rates, right? What happened here? This is last year, again, 2024, September. Again, it might be a little small. I'll zoom in a little bit if I can. Can I zoom in? There we go. You can see you're like at 5.8. That's 5.7 lows. Oh, this is FHA. Let's go to fixed, 30-year fixed, okay? So of last year, right about here, lows were 6.10, 6%. We'll call it 6.1% on your lows of mortgage rates of last year, and then you spiked right back up with yield. So there's a correlation, obviously, with the 10, 30-year yields and what's happening there, okay? Showing you again the 30-year yield. Now you can see the 30-year yield is still very, very high compared to the 10-year. The 10-year it's definitely coming down a little bit more aggressively. The 30-year is a little bit higher, okay? Now, what's really important here? In my opinion, mortgage rates are falling a lot faster, clearly, than the yields are, right? In anticipation. Again, if yields start dropping dramatically, which I think there's a strong possibility depending on the rhetoric that the Fed uses, right, with cutting rates and the future cutting rates, okay? I think it's and they need to answer the question of what is the target for inflation, because they obviously have moved the goalpost, right, from where it is, right? That's going to be big. But what's worth mentioning is if we come back down to 4% on the 30-year yield, the 10-year yield, et cetera, we start dropping dramatically, well, what's going to happen? I would anticipate mortgage rates drop even more dramatically. I'm going to tell you that right now, okay? So it's highly likely, again, just zooming out, let me zoom out a little bit more here so you can see, right? Go back to 2024, right here, 6%, 6 point, this is just fixed mortgage, not FHA. It's highly likely if you go back down to 4% on the yields that we get the mortgage rates lower back down towards 5%. I want to highlight something right now. I don't care what you say, what anyone says. Just go look it up for yourself. I want everyone, and we're pricing in a 0.25 cut right now. Okay, I want to make that clear as well. This is going to be on Wednesday. Okay, I don't care what anybody says. When you have lower mortgage rates, it's going to stimulate the housing market. When the housing market looks good, the stock market usually looks really good. Okay, I'm just telling you that's the way it goes. If you don't like that message, I'm sorry. That's just factual. It is what it is. Okay, if the housing market is doing good, usually everything does pretty well. Now, some people are saying that there's a housing bubble. That's also a very silly statement because I don't think people understand what has to take place for there to really be a housing bubble, or what it has to happen to get foreclosed on your house or to lose your house, right? A lot has to happen. And a lot of people that have homes, let's just say even a low number, 50% of people are still on great rates from back in 2020, 2021. Again, it is what it is, right? So again, I don't think there's a housing bubble at this moment. However, in 2-3 years, there really could be an issue depending on how many people get in at these really high rates, okay? So very important to see. And I'm already personally getting like calls about like the potential refinancing, right? Which is like hilarious. But that's already happening, and people are going to be refinancing in mass that bought at a higher rate. So things to be considering, okay? I think this... We'll see the exact reaction from yields immediately after the call and the rest of this week. But I personally believe this is setting up for the housing market to have a pretty nice little surge in the short term, at the very least, maybe 4, 5, 6 months heading into the beginning of the year. This really couldn't happen at a better time because, again, if yields continue down and mortgage rates continue down, again, think about when you get your tax return early on in the year. That's, again, going to be a hot time to be buying, making down payments for homes. Again, it's just really a really good point where this could be happening. Again, what I'm looking at, what I'm watching. So you might disagree, but that's how I'm looking at this. That's how I'm interpreting it. And again, we'll see exactly what happens, and I'll go more into detail about that. But as of right now, I feel good about where and what's going to happen with rates being cut. Ideally, we get a bigger than 0.25. We'll see, but that's where we're at right now. Another thing that I do want to highlight, okay? I've said this a lot. I personally, this is going to be a wild way to end the video, but I want to see a dip on the market right now. I'll be totally honest with you. Because what we're getting, the market action during market hours, for me, at this moment, is just absolutely, tragic. This is annoying. This is just terrible, right? I don't want to see a 50, 80-point grind all day long. That's the opposite of what I would like to see. I would like to see more action, more, volatility. And when I'm seeing it, just chop fest all day, I would like to see a dip heading into October, ideally. So maybe we will get some of that from the Fed meeting. We'll talk more about it, but that's where my head's at, what I'm watching for. Discord links down below. All links are down below. Have a good one, traders. See you tomorrow.